The crypto bull market is over. At least that's what we've been told. But is it true? Well, let's take a look. Long-term Bitcoin holders have started selling. Death crosses are appearing across Bitcoin and altcoin charts right now. Fear and panic is spreading everywhere. The 4-year cycle, well, that's nearly over. It's not looking good. And it's easy to understand why people have suddenly flipped bearish more recently after the dips that we've seen over the past few days. But I think this is a major bear trap we're looking at right now, and I'm going to prove it to you in this video. I'm also going to show you with evidence why I think this bull market extends into 2026 and why right now is a significant bear trap designed to shake out weak hands at just the worst possible time. Do me a favor, hit the like button. Let's go calm things down. Now guys, before we dive in and find out whether or not we're at a local bottom right now, whether we're ready to push higher, as well as arguments against every single bearish statement that I've seen over the past few weeks, just a quick disclaimer. Nothing I'm going to say in this video is financial advice. Everything I say is for entertainment purposes only. If you wish to invest in crypto, then you should understand that it's risky and you can lose money. So don't risk money that you can't afford to lose, and always do your own research before investing in anything. Now that we have that out of the way, let's crack on with it. Now guys, I know, like you, I've been looking at crypto over the past few days and it doesn't feel that good, does it? But if there's one thing I've learned over my 7 or so years in these crypto markets, it is to try and think as logically as possible and to at all times avoid thinking with emotion, because the market makers and the entire market is designed to trap you at your most emotional points. Therefore, when we see max fear and worry in the market right now, we need to start understanding, is this time to be getting out and seeing potential for lower prices? Or is there really a chance that we can see a return, a recovery from here, even if it doesn't feel like it? And the only way to do that is to look at logic. So we're going to look at the overall market, and we're going to look at all the arguments being put forward by the bears right now and also by the bulls to identify which ones are the most logical so that we can make our right choices. So what's happened? Why is the market so shaken right now? Bitcoin over the last few weeks came down a whopping 26%, hitting lows on Friday, making it the 3rd worst pullback that Bitcoin has seen in the last 18 months or so. The one earlier this year pulled back 32%, and the one all the way back last year pulled back a whopping 33%. So, since this is the 3rd worst pullback we've had, why is it the worst sentiment we've had? Well, it coincides with a number of other things. First of all, because we've had a pretty kind of shaky bull market where altcoins haven't really seen as much excitement as Bitcoin, that's probably one factor. But not only that, but we're now in November, the year after a US election. And this is typically when the 4-year cycle for crypto tops out. Well, I say typically. It topped out in 2021 in November, and Bitcoin topped out in December of 2017 on the 4-year cycle. So according to the 4-year cycle, the top should be in by now or very close to being in. Put that together with the fact that the Bitcoin chart right now is looking a little bit scary, and you will start to identify why this is feeling bearish. So before I handle that 4-year cycle argument, which is probably the key one to pay attention to, and I'll do it later, let's just look at the Bitcoin chart itself and understand what people have been talking about. Now, you see, we have been looking at another death cross. It's when a shorter moving average undertakes a longer term moving average. Typically, this is called a death cross, which sounds pretty painful, sounds pretty scary, something out of Harry Potter kind of thing. But ultimately, it tends to mean that there's been a significant shift from one direction, usually high, towards a low in the markets. But because this is a lagging indicator, it can often indicate a turnaround in the market. In fact, I made this tweet just on Friday, and if you missed out, make sure you give me a follow, Peter_THOC over on Twitter, because I was actually traveling over a few days, didn't get a chance to make YouTube videos, but I was pretty active on Twitter, knowing that many people would be pretty upset and panicking. I said every single time we'd had a death cross over the past few years, this was back in 2023, this was 2024, this is obviously 2025. I said that we had death crosses and then Bitcoin went up. This time went up 161%, up 60%, and now, who knows, okay? But you see every single time, very similar quotes to what we've seen more recently. Bull market cancelled, we're going lower, Bitcoin would up to 30K, Donald Trump destroyed crypto, James wins, like opening up 40x shots, Dr. Profit, all the other guys who like to post where the markets are bullish or bearish, just kind of farm engagement. But you get the point. So death crosses can sometimes mean that we're going to see a reversal, or they can mean the end of a bull market, because we did have a big death cross back in the end of the last bull market. So you stack these factors together. Remember, people are already panicked and worried because the market's down. The altcoins they're holding are down even more. On top of that, the 4-year cycle is coming to an end. On top of that, we seem to be getting good news, but nothing seems to happen on the charts. All of these confluences are stacking up against us right now. We're starting to think that it's all going wrong. It's not, okay? I'm going to show you each and every one of these confluences and why it's BS. So, what are the main negative points I've been seeing across Twitter and YouTube right now? Everyone who's bearish will show you a chart and tell you why this chart pattern will break down to this point, because it always does. Now, let me correct that statement. If you've ever become serious about becoming a trader, then I assume that you have read the OG of technical analysis books, which is Technical Analysis Explained by Martin J. Pring. And if you have read this 852-page mind-numbing book, then you probably would have come to the same conclusion that I did. And you would have started to understand that over hundreds of years of charts and patterns that Martin J. Pring analyzes in this book, he comes to one conclusion: that charts do not tell you exactly what's about to happen. Unfortunately, they only tell you the probabilistic chances of something happening. Now that's if you take out of the equation market manipulation, because everybody knows what an ascending triangle or a descending wedge or a double top or a double bottom looks like, right? The market makers know that you know that. And because they know that you know that, it makes you easier to manipulate. So if someone out there is telling you right now that this double top pattern must break much lower, it has around a 66% chance of breaking much lower. But that's obviously a higher probability of bearish price action. But on the 4 hours, Bitcoin is now creating this descending wedge pattern, which has a 67.9% chance of breaking towards the upside, which would send it back towards all-time highs and probably beyond. And if Bitcoin did that in one candle, you would have to admit that the market would probably be back on. We'd be back into bull market, right? I could also show you that Bitcoin's now broken down through this support, or maybe, depending on where I draw the line, that it's holding the support. I can do lots of different things with charts and look at whichever charts fit the argument that I want to create. This is obviously something that can be used, and yes, I'm not saying that charting is completely useless, but it has its limitations. It shows the kind of movements of the charts over time. It has its limitations, and it doesn't show the full picture. Only if you zoom out does it really show a consistent pattern going on, and by zooming out can you calm things down, because by zooming out then things are going to look a lot better for the overall health of the market. But yes, I agree. This is Bitcoin. A lot of the altcoins don't look so good. And we'll talk about that a little bit later on as well. But here's the thing. On Friday, it wasn't just the charts coming down and the fact that the 4-year cycle is nearly over that caused fear, panic, and everything else. It was also a huge number of different posts and different information being spread around everywhere. Not only this time was it just raw retail newbie investors who panicked, but on top of that, panic happened in influencers, people that you were trusting, people that you were listening to everywhere. Ardiza has around 400,000 to 500,000 followers on Twitter, and he, along with about 100 or 1,000 other people, also who had quite big followers, posted this story. Michael Saylor, the CEO of MicroStrategy, is selling Bitcoin right now. He's dumped $3 billion into the market. What is going on? Now, this post, admittedly, made me panic when I read it, okay? Because I was like, if Michael Saylor does really start selling, then you're right, we are, okay? So I looked at this, and I know that this is from Arkham Intelligence. So I go across to Arkham Intelligence, great website, by the way, and one that you should become accustomed with if you want to grow your skill set within crypto. And I looked at this, which is basically showing transactions of MicroStrategy moving Bitcoin to different wallets. Not to an exchange, not to sell, just moving Bitcoin. And a guy with 500,000 followers in crypto who's been around a long time, you would hope knew this, okay? But instead, he chose to just farm the engagement, to farm the fear that was going on in the markets on Friday. Which is a real shame that people need to do that, okay? He and a bunch of other big influencers just spread complete BS, okay? This is not true. He spread it on Friday. This creates huge amounts of panic and fear and anger and worry, okay? The anger that I saw on Friday across Twitter and YouTube was insane. Hadn't seen anything like that before. So, if we're seeing anger, real anger and real panic and real depression in the markets right now, where do you think we are according to this Wall Street cheat sheet? Now, this is a Wall Street cheat sheet, and it tells you what the sentiment in the market is at any time. If you go across to Twitter right now, you'll see a lot of bearish people telling you that me and other people being complacent. This is complacency. The market's okay today. If we have a bounce, they'll tell you that we're having complacency. Complacency, as you can see, follows what? It follows euphoria. I'm a genius. We're all going to be rich. It doesn't follow anger, depression, panic. Since it doesn't follow that, I would suggest that we are closer towards coming into a disbelief phase and a hope phase than we are going into complacency. Just to compound that further, we haven't just seen euphoria. Euphoria we haven't seen in the market, I would argue, since maybe back in, you would maybe say euphoria crept in a little bit in December or early December 24, but not that much. Really, maybe not even in 2024 March, which was a bigger kind of like push than maybe this one, at least that's how it felt. I haven't seen crazy euphoria like we saw back in 2021. Everyone aping into NFTs, like Gala Games, a useless kind of gaming coin, going and doing like a 500x. Bonkers gains were made during this period of time. Okay, we haven't seen anything like it whatsoever. Bitcoin, yes, has been running nicely, but in general, no crazy euphoria has been seen. And that's because the global markets are not really supporting it right now. So if we're going back to the Wall Street cheat sheet right now, use it for what it says it is. It's a cheat sheet. It is the answer book. It's telling you what is happening in the markets. Right now, we've not had euphoria. We've had anger, we've had depression, and if it starts to rally again, you will see people saying that it is not real. It is a disbelief rally. This is the cheat sheet. It's like me giving you answers to the maths test and you taking the maths test and changing the answers because you don't agree with it. And that's fine, okay? This Wall Street cheat sheet is telling me something very key. This here is a bear trap. And I believe this is around where we are right now. A bear trap has been sprung, and it's been sprung at a very opportune moment when all of these other confluences are coming together. Everybody believes the 4-year cycle is coming to an end, but we are now moving to a 5-year cycle. Why? And I know you're going to be like, well, this doesn't make much sense. It's a 4-year cycle. It's a 5-year cycle. You said we were going to top. Guys, you're right. I thought that we were going to see a much more aggressive, better growth phase for this market this year. I thought, yes, we've seen it for Bitcoin, but I thought the altcoins would see a lot more upside. Why? I thought that we were going to see more rate cuts. With more rate cuts, there would have been more liquidity. I thought that we would see, I didn't think that we were going to see a record-breaking long US government shutdown that drew or sucked liquidity from the system. I thought that we would follow the 4-year pattern. Okay, it made sense because the 4-year pattern happens for a reason. Now, in order to understand why we are now looking at a 5-year cycle rather than a 4-year cycle, we need to understand why the 4-year cycle even existed in the first place and why crypto went up every 4 years and down the year or so after it. So why is it? If you just the halving, you're wrong. It's not the halving. It never was. The halving just so happens to fall in line with what's going on with Bitcoin and crypto in general. And I'll tell you why this is. 4-year cycle coincides with debt refinancing. And this is something that I've learned from people like Raoul Pal, from Jack Mallers, and other people who've been significantly better educated in the world of macroeconomics than I have. While people will say that Raoul Pal did this and he got this wrong or whatever else, there is a few people more educated with better credentials to be talking about this than him, in my opinion. Okay, he has basically said that the 4-year cycle is linked to debt refinancing, and it should make sense here. This is the US debt clock, and you'll see that as I'm talking, this is going up by millions of dollars every 10-20 seconds. Okay, the US national debt clock is going absolutely crazy because the US has massive amounts of debt. And since the interest rates are so high right now, the debt is getting accumulated at crazy rates. Now, every 4 years, up until 2021, the US would need to renegotiate on its debt. Why? Because it's not going to pay this debt off, which is like $38 trillion, which is like multiples of its GDP. It's not going to be able to pay off its debt in one go. So after 4 years, it can't pay off its debt. It needs to renegotiate it. Same if you've got a mortgage and you can't pay off your mortgage within the 25-year period, you would have to go and renegotiate that mortgage. Now, do you want to renegotiate that mortgage at a time of high interest rates or low interest rates? Low interest rates, correct. So you go and renegotiate your debt when the interest rates are low. You do this because it allows you to decrease the burden of the debt you already have. Every 4 years, the US Federal Reserve would bring down interest rates. And what would they do? They would use this time to go and refinance the debt. They, however, extended this from 2021 for 5 years rather than 4 years. And that means that that refinancing of the debt can take place next year rather than this year. So what do? They bring down interest rates, they print money, and once they've done this, they then refinance the debt, and that's how it all has been working. So that 4-year cycle, why Bitcoin's been going up and down, is all linked to this debt refinancing that takes place over a 4-year period. But because we've had high interest rates, it's extended into another year. That's because we had high inflation, etc. So 5 years, okay, which means 2026. And by the way, these charts come from Raoul Pal and his macro investor platform. Go and check him out, okay, smart dude. US 2-year bond yields, okay, which is the red line, effectively linked to interest rates. So interest rates are high. The 2-year bond yield is also high. Okay, so when this goes down into this deep level, the red, then you can see the ISM, which is like the business cycle, also comes down. Okay, so the ISM basically comes down really low. It shows when the interest rates are really high that it's not necessarily that good for business, not that good for like manufacturing, not that good for what's going on behind the scenes. So high interest rates, which came in 2022, never really increased. Crypto in general, not necessarily Bitcoin, but altcoins haven't been able to do that well because the ISM is underwater. It has been a really difficult economy to survive in. The ISM, as you can see, is very closely linked to Bitcoin's price. So when the ISM is going up, you can see that the Bitcoin price goes up. Over the last few years, you can see every time the ISM is going up, which is linked closely to interest rates. So when interest rates are low, the ISM goes up. Interest rates go low, Bitcoin will go up. Okay, so this is a very key thing we're seeing. Interest rates come down, ISM goes up, Bitcoin also can go up. It's going to go up. Interest rates will come down. And while people are telling you right now that interest rates are not going to come down because of this and that, inflation is incredibly low. The US Federal Reserve has now been meeting at the weekend with various different banks and lending facilities. Impromptu talks come amid worries about strains in money markets. Why does the US Federal Reserve cut rates? It's going to be forced to do it very, very soon because its economy is really struggling. Okay, the money markets, i.e. the banks, might start to take on water, which is going to force rate cuts. This forcing of rate cuts, this forcing of quantitative easing is going to push the ISM up, it's going to push Bitcoin up, it's going to push the altcoins up. That means that that will continue higher until rate cuts come down to 1%, 2%, etc. Liquidity will flow in, markets will go up. So the 4-year cycle, based off the fact that just in the last 2 bull markets, it happened to top out in November, December, doesn't mean anything, okay? If you still believe it's because of the halving, then good luck to you, okay? Because Bitcoin this year topped before the halving. Doesn't make any sense. There's a lot of kind of charts that will tell you things. The only thing that is consistent here is that Bitcoin is following the ISM. It's following liquidity. When liquidity is good, everything else is good. And guess what happens? When the US Federal Reserve also cuts interest rates and brings in quantitative easing, who else does it? China will do it. The United Kingdom will do it. Eurozone will start doing it. Australia will do it. Canada can do it. New Zealand can do it. Everybody out there can also print money as well because all of their currencies are linked to the United States dollar. In the short term, things have been choppy. Things haven't worked out exactly how I thought they might work out. Okay? What happens today, tomorrow, difficult to see. Okay? But what happens ahead of us is bull market up. And the fact that people are so angry, so pissed right now, so upset, tells me that we are damn close to a low being in. We've had the death cross. The death cross when everybody's panicked and low, like we got here, like we got here, like we got here, okay? I don't think that this time's going to be any different. Bull market tops. When does it top? Well, it depends how quickly those interest rates come down, okay? Likely, Bitcoin will top before the top of liquidity cycle tops, okay? But I do think there is good times ahead. Now, what about the market manipulation? What about this? What about that? Guys, the market is heavily manipulated. You know that, I know that, okay? The charts right now are designed to try and trap you and tell you that the price is going to go down, okay? The fact that everyone's fully panicked and scared and fearful right now tells me that we haven't got much further to fall, in my opinion, because all the kind of like macro is supporting us. Now, throughout this kind of time as well, the smart money and the Binances and the big money behind kind of the markets, what are they doing? They're biding their time. They're keeping this market as panicked and scared and sidelined as possible until the time is right, until that liquidity is ready to flow. The liquidity will begin to flow into the markets, and as it does, we're going to have a better time. That doesn't happen necessarily tomorrow or the next day. Now, do I think to myself, well, yeah, but what happens if they don't cut rates till like mid-December? Does that mean that we still go sideways? Maybe. Does that mean that we still come lower? Maybe. But guess what? At some point, some announcement might come out that they're going to start quantitative easing. They're going to inject liquidity into the markets. If a statement like that comes out, guess what? We have something like this take place. Suddenly something like this take place, or like this take place. All of a sudden a bottom will come in. You'll see it rip back towards the upside like it's done every time before. And then we're going to get caught on the right side of things for once. It's been difficult. It's been hard. But this is where I am standing with this. If you don't like it, that's fine. Really not that fast. Okay, I don't need you to do what I'm doing here. I'm just going to show you what I'm doing here so that you can understand for yourselves what might be happening. Now, just on top of that, let's have a look at a few more charts. Very key to look at. The Bitcoin dominance doing something very, very, very interesting. You may have noticed over the past few years, every single time Bitcoin went down and the altcoins went down harder. But you may have noticed the Bitcoin dominance has broken this trend line. So I know charts don't always make sense, but here's a chart for you. I don't know what the percentage chance of this breaking down lower is. So it looks very interesting that Bitcoin's performing worse than the wider market right now. Crazy. Ethereum looks kind of semi all right, bouncing in and around this zone. But the ones that have kind of my attention here, Total 2, you can see kind of like running into serious support resistance area zone here. Okay, I do think Total 2 maybe bounces in and around here. Again, that's in line with that previous bull market top back in 2024. You can see again this key area here seems to be holding it as support. If we look at the others chart, you can see that it's bounced off of this key trend line, which has been up against since 2020. If we look at the others versus Bitcoin chart, you can see again it's basically holding this chart line which has been on top of since 2017. So some charts can be bullish, some charts can be bearish. Okay, ultimately longer term charts are always going to be more reliable. Look towards the weekly, look towards the daily charts. I think you're going to find that things aren't really that bad. This is the others chart versus Bitcoin, which is altcoins outside the top 10. I feel fairly safe, fairly solid here. So yeah, hopefully everything's okay. Guys, if you want to connect with other people across crypto, other people to gain experience and insights, you want to join me on various different private calls and things like that. I do Zoom calls each week with my community, as well as share altcoin calls, as well as talk about this kind of macro stuff in more detail. We have other full-time macro experts and other full-time traders who are helping out in these groups. If you want someone to kind of hold your hand through these crazy markets, then make sure you join the Moon House, link down below in the description. Over there, you're going to be able to kind of get a bit more insights and understand what's really going on behind the scenes while the majority of crypto runs around. I hope you enjoyed today's video. Do me a favor, guys, if you got this far through, leave a like. Obviously, down below, leave a comment. I'm sure there's going to be lots of grumpy, angry comments down below. That's fine. It's just showing us where we are in this market. It's a good indicator to me that we go higher sooner rather than later. Hope you have a great day, great week, and I'll see you very soon in another video.